Hi guys, Max here, and yesterday was a pretty interesting day in the markets to say the least. We saw equities move up for the most part, but with some pretty poor developments in regards to some things, and we had some other crazy bits of news, like Elon Musk buying up 9.2% of Twitter. We'll cover all of that and more, so let's get right into it. So the markets themselves, what happened? Well, they were up for the most part. The S&P 500 rose by 0.8%, so a solid performance there, but nothing crazy. The Nasdaq index moved a little bit better, with tech stocks performing well, so it rose 1.9%. Again, quite a strong day. It was of course led by Twitter, but more on that in a moment. Now, European markets saw similar performance. They were also up for the most part. The Stoxx 600 rose by 0.8% and the FTSE 100 rose by 0.4%. In general, the first day to the week was modest but solid nonetheless. Now, the big drivers for the day were, of course, the war in Ukraine once again, recession risks, and then finally Elon Musk's antics. So, what's going on in Ukraine that is influencing markets this time? Well, of course, aside from just the war in general, Russian troops abandoned their positions near Kiev and they've moved their troops eastwards to fight in the Donbass for Donetsk and Luhansk after failing to take any major cities in the north. Now, this would be good for markets under usual circumstances because it's a change of tact by Russia after failing to meet their wartime objectives, and this would be seen as a slight de-escalation of the war. The problem is that the Russian troops have left behind an awful lot of evidence of war crimes, murders, rapes, torture, loads of stuff like that, and so now more sanctions are coming Russia's way. Just this morning, for instance, the EU proposed to ban all coal imports from Russia across the board. There is plenty more talk of banning oil and gas imports as well. Some countries like Lithuania have already gone in that direction, and it's very feasible actually that oil is banned outright from the EU. Europe can live without Russian oil, contrary to what a lot of people think. Now, natural gas, on the other hand, is a little bit less clear-cut. Lots of countries are asking for a total ban on natural gas as well. That would cause, though, huge increases in price and really a full-blown energy crisis across Europe. Germany is the main force working against this. They want to keep gas flowing. They've always wanted to keep gas flowing, but Germany is now under huge pressure for enabling a war which has now devolved into genocide. Maybe then we'll actually be surprised by Germany's actions, but to be honest, I seriously doubt that. Either way, more sanctions are coming the way of Russia. That is not ending anytime soon. We are also seeing support for Ukraine itself, material support in the name of weapons being stepped up on this development of the war as well. The idea, the narrative going around is that if you aren't arming Ukraine, you are allowing this genocide to take place, so lots of countries are pushing forward with arming Ukraine. Anti-ship missiles from the United Kingdom will probably find their way into Ukrainian hands before long. Drones from the US, 10 of basically the best loiter munitions in the world, will be in Ukrainian hands soon enough as well. Now, over the last couple of weeks, there have been threats from Russia that if gas isn't paid for in rubles, then it won't be sold at all. But then 4 days ago, Russia clarified that they weren't going to implement that change yet after being refuted by the EU. What it has now emerged is the case is that Europe can buy gas with euros from the companies selling it, the state-run gas companies like Gazprom, but then those companies have to then exchange euros for rubles and give those rubles to the Russian state. This is a pretty bad bastardization of the original plan, and it won't be as effective as Russia would have hoped, but they're claiming in the future they will resort to that original plan, not only just for natural gas, but for everything else as well. Frankly though, these tactics just won't work with anything else because natural gas is the only thing that Europe absolutely has to get from Russia. They just don't hold enough influence over other natural resources to make that work really, even if they can inflate the price by cutting off their supply. Either way though, commodity price inflation is 100% on the way. It's not going to stop, so get ready for inflation as a whole to continue too. So next on the topics for investors and their minds are recession risks. So what exactly is going on here? Well, again, over the last week or so, we saw the 2-year and the 10-year yield curve invert, which is a monumental indicator of a coming recession. And yesterday, we saw the 30-year and the 2-year yield curve invert as well, yet another indicator of recession. The last time this one happened, for instance, was just before the global financial crisis in 2007. Right now, investors are waiting for minutes from the last month's Federal Reserve's Federal Open Market Committee meeting, and back in January, it was those very same minutes to that meeting which caused the market crash. So investors are a little bit worried right now, understandably so, but really, we just have to wait until Wednesday when we find out what the minutes are, when we can see what the thoughts behind the Fed's actions are. As for bonds themselves, yields rose once more in the US. The US 10-year Treasury yield rose 2 basis points to now sit at 2.4%, another very high figure. I personally seriously expect to see yields continue to rise and debt servicing in general to continue to get more expensive too. Gold prices rose slightly, just under 1% for the day, with prices now sitting at $1,940 an ounce, showing loads of support in that region recently. Sadly though, we did not see oil prices continue their route from the week before. They rose 4% yesterday alone, with WTI crude oil now sitting at $104 a barrel and Brent crude oil now sitting at $109 a barrel. Right now, cheap oil is just a pipe dream, sadly enough. Finally then, really quickly, what went on in the world of crypto? Well, the markets are holding steady with their gains over recent weeks. Bitcoin is currently sitting at just below $47,000 and Ethereum at about $3,500. So the main coins in the market are holding on to their recent gains too. Altcoins were pretty standard over the weekend. No major moves, but slight gains again. Now, there are some developments in the crypto world to talk about. The UK has come out with a proposal to make the country a global crypto hub. As of yet though, the details are a little bit murky and unclear, and I will put out a full-length video on Stoic Crypto, link down below in the description as always, explaining everything in full shortly in the future. As of right now though, stablecoin regulation looks likely. Decentralized finance will see some regulation too. In general, this is actually quite bullish news, and if the UK moves in the right direction with purpose and with vigor, they can do really well here. But our government is used to having big plans and just failing to ever push them hard enough, letting them fizzle away and die out, never really achieving anything. So I am holding back my joy for just a little bit. Now on to Elon Musk and a little bit of Tesla news actually, because there has been loads of developments with both of those recently. So let's start with Tesla, because we missed it the other day, but in short, it was the end of the quarter and we saw Tesla deliver more cars once again as fully expected. They've continued to grow and are performing really well in that sense. The share price has exploded recently as well. From literally 1 month ago, the stock is up 50% almost. The share price was hovering around $800 before, and now it's sitting above $1,100. It had been declining with the rest of the tech market for the first couple of months of 2022, but it started to change as the rest of the market in general picked up, again with tech leading the charge. And then Tesla's share split news saw another pump, and then Elon's news that he's bought a large stake of Twitter seems to have aided Tesla's share price too, and then they had their strong quarterly results. Either way, I've gotten a little bit of flack recently for supposedly being biased against Tesla, but the simple truth is $1 trillion company should not be losing or gaining 50% of its value over the course of a month, especially as the company hasn't actually changed much at all over that time frame. The reality is that either the markets were grossly mispricing Tesla a month ago, or they're grossly mispricing it today, or more likely, as a result of the ridiculous amounts of speculation on the company as a whole that we've seen for 2 years now, it's probably grossly mispriced almost all of the time. Now, Elon buying Twitter was the big news yesterday, and I made a full-length video explaining everything going on. So if you haven't seen that, you're not caught up to date, you don't know what happened, then go watch that video now. Link as always down below in the description. But what is the development today? Well, Twitter's share price has exploded and it's now up 27% since before Elon announced his news, which means he's up $1 billion on his investment alone. He's also started indicating that he might be pushing for an edit feature to be added to Twitter, and Parag has been answering his tweets too with similar stuff, so I can almost guarantee they are communicating behind the scenes, and I suspect Parag is frantically trying to ensure he keeps his job. Now, I mentioned in the video I made yesterday that Elon reported a passive stake in Twitter, which means when he reported his filings to the authorities, he said he does not intend to take an active role as an investor and to change how the company is run. But literally just 1 day since this news came out and we realized that he has a passive stake, he's already started trying to influence the way Twitter is run by enforcing an edit button on tweets. Now, there has also been some talk about there being a legitimate investment case to be made for people like Elon to buy into companies and then just tell people that they've bought into those companies because it will send the share price soaring. We saw a similar thing with GameStop buying that gold company about a month ago, and the company they bought then soared in price as well as the apes from Wall Street Bets brought that up too. Now, I can see this being an idea or a tactic used by anyone or anything with a cult following. Think people like Trump or Elon and companies like Tesla or GameStop, any personality or company with a big community surrounding it. So I suspect we might be seeing far more examples of this kind of thing and this crazy price action happening in the future. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Thank you all for watching, stay stoic, until next time.